Hello and welcome to Pro Trader Strategies Market Commentary for Friday, April the 21st. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data across the pond today. We got flash PMI for the European region came in at 55.1, expected to be 53.2. Now remember, across the pond, their flash PMI numbers are about as important as our ISM PMI numbers, which is the Institute for Supply Management. We also get flash PMI numbers, which we got today for the US, but they aren't nearly as important as the ISM, Institute for Supply Management, Purchasing Managers Index. All right, so the French flash PMI, was 55.1. The French services PMI came in at 57.7, was expected to be 57.2, so both of those two numbers slightly higher than expected. The German flash PMI came in at 58.2, right in line with expectations, although the service sector flash PMI for Germany came in at 54.7, slightly lower than the expected 55.5. And then the European flash PMI manufacturing came in at 56.8, was expected to be 56.1, and the flash services PMI for Europe came in at 56.2, which was in line with expectations. And then Great Britain retail sales came in at negative 1.8, was expected to be a negative 0.3, so quite a bit lower than expected there. And then we had Kashkari here in the United States speaking a little bit earlier, and then we have our flash PMI manufacturing number came in at 52.8, lower than the expected 53.9, and flash services PMI here in the United States came in at 52.5. We also got existing home sales coming in at 5.71 million units, was expected to be a 5.61 million units, so a lot better than expected on that front, so that was good. Flash PMI, a bit dismal. Anyway, on to the overall markets. We've got crude oil down quite a bit. As soon as we busted below this 23.9 Fibonacci level that acted as support for the last 2 days, we really saw that market kind of slam down today, really giving up a lot of ground as we got below that fib level, really accelerated the downside and kind of settling down right here at this high volume node, which is what we would expect. So as you can see, it's right in line with that volume node. Next stop for support would be this 38.2 fib level, which has acted as support several times before. So that's a very real number. I was discounting it a little bit when we first came back down to this level. I thought once we got below that volume node, we were going to accelerate to this downside. It didn't seem to happen. We could still have that on the docket. I don't think it's going to happen for at least a few weeks now if we continue this downside trend. And then on to gold futures. Gold futures moving higher today as the broader markets in the equities are kind of coming off a bit after yesterday's big rally. Could be just profit taking, but again, still the flight to quality, and this 9-day moving average is acting as support. So keep that in mind, moving a little bit higher today. Then with the bonds, up about a half a point on the day. Again, just kind of a flight to quality situation where people are pulling a little bit of money out of equities and flying to the safety of gold and the bonds. Right now we got the Dow Jones down just about almost 17 points, really finding support on this, support and resistance in a sense, on this 50-day moving average. So moving forward, that will act as a support resistance. We're toggling right alongside that right now. NASDAQ just down only a point on the day. As you can see, it's been a really quiet day. I actually haven't even done a whole lot right now. I've got a couple of things working, but I'm going to be waiting towards the end of the day because we've got a lot of expiration Fridays for April today. So I have a lot of positions that are going to be either closing for a loss and basically expiring worthless, or some of them are in the money. So I'm going to have to be doing some jiggering with those, maybe roll them out in time. We've got a couple working orders we'll talk about here in a minute. And we got the E-mini S&Ps down about 5 points on the day. Again, not a whole lot going on, not a whole lot to say about it. It could be just taking a breather today as people take a little bit of profits going into the weekend after yesterday's big rally. Now on to the 30-minute chart of the E-mini S&Ps. This is a 20-day setup with the volume profile intraday, if you will. As you can see, as soon as the market opened for the most part in the day session, those profit takings started happening. It was pretty consolidated yesterday. Very inside day. As you can see, the value area high, value area low. So very inside day today to yesterday's market action. Now Target, I talked about this yesterday. Target was that trade that I had on for quite a while now, and closed it yesterday. I had it working for a profit, and in Target I had on the April, it was the 52-53 put spread, and I sold the 53 puts and bought the 52 puts, create that credit spread, sold it for 27 cents and bought it back for 5 cents yesterday. So ended up getting out of that one. I was working a little bit lower and had to move it up. I've been trying to get out of that trade for a couple of days, actually almost a week now. I tried to get out of it for 50% of my max profit, if you remember, for about 13 cents. But yesterday coming in to the day, we had a bit of a move up, and all of the theta came out of that trade. So was able to get out for 5 cents. Usually I'm trying to get out of that a little bit earlier, but the day before it just wasn't working out. Came in the next day and everything all of the implied volatility came out of it. Now on to trades that I'm working and trades I'm looking to get out of. SPY, if you guys remember, I've had on this trade forever. It seems like I've been rolling this thing out in time and finally had it into the April, the 217 strangle in there, and that ended up starting out as actually that's a straddle. It's the April 217 straddle, and I originally had that on as a strangle for several months ago, rolled that up to be mechanical into a strangle, and then rolled it out in time, collecting more credit. It's still ultimately a loser, but I ended up covering it for $17.77. So, but I did collect probably close to $5-6 on that. So it was a loser at the end of the day, but I did stay mechanical with it. I'm just tired of holding on to it, I guess, and holding on to that dream of coming all the way back down to the value area. I don't see that happening anytime soon, and just want to pull the ripcord on it and move on at this point. I'm just not loving it. So a couple of other things that are expiring. If you guys remember, Amgen is a trade that I had on for the 1x2 options webinar. And with the 1x2, with this one, we added a little bit more risk on the upside. So I had on the April 190, 195 call spread, 1x2. So for every one of the 190s I sold 2 of the 195 calls. And the idea with that was that I could cap myself to the upside, add a little bit more risk to that, but I had no risk to the downside with that if the market sold off, because the 190 calls would expire worthless, and I would be able to keep the credit that I got for that. That's expiring worthless, so it's basically like a 70-cent winner because of the credit that I originally collected for that. Another one that I'm looking at is IBM. If you remember with IBM, I did that for the earnings trade. So with IBM. IBM I have on the April 162, 165 strangle right now, 162 and a half, 165 strangle. So the 165s are the puts because I rolled down my calls, went a little inverted on that. Trading around 161 right now, came off a little bit, was hoping to get at least up to my 162 and a halves, maybe even a little higher on that. So that one is going to need to be taken off, or ride that in and be long the 165 IBM. So I think I'm going to let that one ride, get that stock put to me, and start lowering my basis, becoming mechanical with that, which is right in line with our options webinar that we're doing. NFLX is another one that I have on that's going to be expiring. I need to get out of that one. Also, Whole Foods is one where I'm just slightly in the money. I am short the April 35 and a half calls. Going to need to do something with that one. I don't know that I really want to go into that with that trade. It's about $1 above me right now, so I'm going to probably get out of that one. I don't really want to be short IBM or short Whole Foods. And the other thing is with XLU, I'm going to need to do something with that one because my 52 puts are in the money, but I'm writing that out to the end of the day, hoping that we can get a little bit pullback because I'm long put spread in there. I'm long the short the 50 puts and long the 52 puts in April. So it's a slight loser right now, but if I can get a little bit of a pullback, that one will be working out all right. So that's about all I got for you guys today. Just wanted to give you a State of the Union update, I guess, if you will, of some of the trades that are going to be expiring today and some things that I need to be doing, but I'm going to kind of hold on to some of those till the end of the day and play around with it. That's all I got for you guys today. Stick around for the webinar today. It's going to be on earnings strategies and how to increase your probability of profit with those. It's going to be a great webinar, so check it out. Go to protraderstrategies.com. It's a whole series that we're going to be talking about how to build different strategies around different situations, and then how to stay mechanical if one of those doesn't work out for us. All right, so if you can't take that, take it easy.